Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It is December 14th. This will be our chart lesson for today, and this is going to wrap up our week. No chart lessons on Fridays, and at this point, I'm probably going to try to work at least Monday next week, maybe Tuesday. So we'll just have to kind of see how the week's going. It didn't look like we were going to have much today. This looked like it was going to be a really tight range, and then suddenly we had this nice sell-off here. So it turned out to be a pretty good trading day. Not a lot of trades, but the ones that were here were pretty good trades. So, um, and you got a couple of them had runners, so you could have had a chance to, if you only caught one or two, you probably still made some pretty good money. So, but let's talk about the trades. We'll wrap this week up and let's just get started here. First trade I saw was just before the regular session opened. That's a failed second entry long. Notice you're moving down first entry, pull back second entry, and you get that big bearish bar. Um, just go short right there. And your target is probably down here. You got to be a little bit concerned about this. Um, didn't end up making any difference. You would have scalped out of that pretty quickly. Then it pulls back, gives you a little breakout pull back short. But again, your target is probably this double bottom, and it could keep going, but that's your minimum target. So just make sure you got enough room to get out before you get to those lows. And notice here how this broke lower and then it backed up and actually closed back inside this previous bar. I think you could have gotten filled maybe at least one tick back into that bar, maybe two. Really, you only needed one, I think, to get out before reaching this low. And this is the main low you're worried about, the very low, including the stem. But you got to pay attention to those um, closes too. If you can get out before those, it makes it even better. So again, it doesn't matter. You get out of that one pretty easily. And then notice what happens when you just start going sideways in this real tight channel. Just stay out of that. You got to be really concerned here. And then of course you get that failed break lower right here. But you don't have a very good signal bar. So wait on a higher low and you get that right here. It looks like a reversal pattern. Um, but it's such a big bar. I think you're better off to wait on a higher low and just make sure that, because prices will probably, this is more like a failed breakout of this little range. So you really want to wait and see if prices come back and test that high and then go higher. And that's exactly what happened here. And so I like going long there. And again, it gets exactly you get exactly a 6 tick move there. So that's what it takes to scalp out 4 ticks on a going in with a buy stop. It takes one tick for your buy stop, and then you have to tick through the fourth tick to get a fifth tick actually to get out of a limit order. So it takes 6 ticks in most cases. Occasionally you might get lucky and get out with a limit order without it ticking through your price, but generally it's got to tick through. So and that's exactly what we got there, just enough. And then we just went sideways. So just stay out of that. Unfortunately, you don't really get a chance to catch this big move down. It never has a correction anywhere except down here, and it's not a very good signal bar. And of course, if you'd went short there, you'd have got burned, and that's why you don't go short there. They were way too far away from the EMA. Uh, once we get down here and get this close, so, and of course, you would have wanted to look for, here's your first leg down. So once we started lower, you're looking for a measured move. And you can see we've already pretty much had a perfect measured move by the time we get there. It actually made that one little tick dip lower like you usually see and then went higher. And so that's a perfect measured move basically. And so you definitely don't want to be getting short down here that far away from the EMA. Another thing you might have looked at as well, since we were somewhat of a range here, you would probably measure that and look for a measured move in that instance as well. And notice that puts you down to here where we got a little bit of a bounce again as well. So that would have been your secondary target as well. And notice we ended up going to there and we actually ended up getting on there and finding resistance and prices took off lower again. So, um, but yeah, I hate to see a move like that and you can't get in it, and that's what'll trip up a lot of people, and they'll start forcing entries. But sometimes that happens, and there's just no good way to get into that because you don't want to be going. You had a double test of this here, so you could have possibly tried to enter there, but look at all that resistance or that support right there. You don't want to go short right into that support. And look, it did bounce, and it would have stopped you out one tick above that. If you put your stop one tick above it, you would have got stopped out, and then it would have gone exactly where you were hoping it would go the first time. So plus, even if you entered here, when it pushed on through, your other lows are right here. Actually, this is the one you're most concerned about down here where you've had more bounces. So you still don't have enough room there. So you really just have to skip that trade. And I hate it. When it took off and kept going, I'm like, man, I missed that. But as I talked about the other day, you can't beat yourself up over that because you still did the right thing. Because next time you'll enter and it'll go down here and hit that low and bounce and go straight up and stop you out. So, but you end up getting plenty of good opportunities to get short here. Notice how we bounce here. It's two legs back up. This is basically a second entry short. Prices never tick lower here, but you got a leg up, correction, and then a two-legged move up on another leg. And so this is a second entry short. And you would have had a runner here. It just takes off. You get a failed second entry. There's a lower high here, but I'm not crazy about going short right there. I think you want to wait on that reversal, which comes right here. So failed second entry long, go short right there. And it's also, prices are still closing inside that trend line. That turns out to be a nice move down. Then you get a break here. You actually get two legs up. You would have had a second entry short here, but it's just a neutral doji. Let me make that a little bigger so you can see it. But you can see that doji there. That's a true doji. You don't want to go short below that. And we got a little resistance there. But then you come back and test that again and get a relatively small bearish bar. So that's the one you want to take. And it is off that midline too. And I got this, had this trend line here. Notice that you got, when you came back here, you tested this resistance area. But you also, if you drew this trend line down off of these lows and pulled it up, it turns down off of it to the tick. Using those closes. So that was another reason I like that one. But then you get the failed second entry long, and you're just looking for prices to continue down this trend line. And at this point, you want to measure this leg and look for a possible measured move, and look where it puts you, right in here, down near the lower side again, and that's exactly where it ends up going. So this turns out to be a nice move, and you would have had a runner again, and it continues down. You get another chance here, but there's too much sideways there. I'm not crazy about that one. It would have worked similar to this one, but it's just not a very good setup. It's a first entry. It's right into multiple little lows there. It's right at the support resistance, and so you want to see that act as resistance at least a couple of times before you go short there. And then we get a little two-legged move back, but this is almost a repeat pattern of the last one. Where was that one I was showing you a minute ago? I can't remember, but you get that doji right there, and you don't want to go short below that doji. So it actually takes off and comes back and gives that double test. Notice that eye, and you test it once, twice. It's also off the, again, off the midline, off the EMA, off that resistance area multiple times there. Plenty of room to get out, so that's another one you want to take. Runs down, then it pulls back. You get a first entry long, second entry long. So that's a failed second entry, a nice bearish bar, enough room to get out before you get back down here to the low side of the range again. It's off the EMA, off the midline. Multiple reasons to take that trade. And this one is one of these bonus trades because you figure it's only going to come down and probably touch this lower side trend channel line before it goes back. But in this case, we get a huge overshoot, and it just keeps going, and it never tick. You know, when I get a trade like this, I'll start putting my stop above the last bar. And notice you wouldn't have got stopped out till right here doing that. And so you could have gotten most of all that move. And that's a sure runner right there. So that's one of those bonus trades that you're not expecting to happen, that just happens for you. But whenever the market's trending well like this, I always try to hold some runners just in case, because you never know. Again, I really thought prices would hit here. If you do get an overshoot, you might figure something like this before it bounces, and that probably means you're going to get a reversal. This thing gets a huge overshoot, but again, because it did get that huge overshoot, um, you expect you may get a reversal here. Um, there's a nice failed second entry short. I definitely wouldn't be going short way down here this far away from the EMA, having been away that far. That's a sure trap setting up there. The only reason this is green is because this has been a strong downtrend. You can see we've been trending down almost all day. It's late in the day, so it's a little risky. But this is where being a little bit aggressive and having a trap here, guaranteed they probably trapped. And if we start going up, it's a lot of these shorts are going to exit now, and you can tell that it was a trap by it burst up real quickly. And so I like going long there. It's got to be green because you're trying to pick bottoms, and I don't recommend that. But if you see this big overshoot here, and then that failed second entry short, still that far away from the EMA for that long, then you might risk that one. So if this would have been a range day, that would have been blue all day long. And I really didn't even want to mark it green. But I'll be honest with you, I like that trade for the reasons I explained. It's a little bit more advanced. You need to know what you're doing, and you could still lose. But when you've already had this many trades and had runners on them, and you've caught a couple of them, you probably got a little extra money to risk. And it's, to me, it was worth taking a risk right there. Where normally I'd say no way. But again, it's advanced, and you need to know what you're doing. Don't be picking bottoms and gambling. So we'll leave it at that. But anyway, you also might have measured this. We don't quite get a measured move here. It's real close, but I would do that and draw this next line down here as your target, because I'm surprised we didn't get there, because usually that's how you find your next targets. But we came up a little short. But also the fact that we didn't get there and it starts bouncing, that tells you we're probably going to have a pretty good correction here, and you actually end up, there's your first move up, and then there's your next, and we basically got two measured legs there. So that's and there's two legs in this first leg, then the little two-legged correction, which is usually the center of a pattern, and then your next leg up. So that got you well into the 2 o'clock hour. So yeah, pretty nice trading day. We'll back out there. It was pretty much all downhill all day. It was a little flat. You can see we're back above and below the EMA consistently here. And when that's happening, you can trade it both ways. Once you know this thing's pointed down and we're steadily downhill, you really don't want to do anything but shorts. Based on this big overshoot, you might have risked this right here with that trap. Being that far away from the EMA, but make sure you go back and watch that a few times, and you want to be advanced to be trying to do stuff like that. Again, I probably shouldn't have even marked it, but it was a good opportunity, plain and simple. So anyway, I'm gonna wrap it up. This is gonna wrap up our week. We'll be back again to do it Monday, most likely. I'm pretty sure I'm gonna come in Monday, and we'll have to see about Tuesday. I'm not sure about Tuesday yet. Definitely from Wednesday on, I'm taking off the rest of the year. So be prepared. No, after Wednesday, definitely no more chart lessons the rest of the year. I won't do any mid-morning charts either, unless I just happen to get bored during the holiday and come in one day. I might do something, but don't expect anything. So I'll probably take that whole time off. But anyway, I'm going to wrap it up for today and wrap this week up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.